Imagine this. You're 25 years old. You've saved up $5,000 and you finally decide to invest. You're excited, but also terrified. Because one wrong move, that money could vanish overnight. And it's not just you. Thousands of young people today are stuck in the same dilemma. Should I invest? What if I lose it all? Some even avoid investing altogether because of fear. But here's the truth. Avoiding investing is actually the riskiest decision you can make. Inflation eats your money like termites eating wood. Quiet, invisible, but devastating over time. Now here's the twist. Investing doesn't have to feel like gambling in Vegas. There are ways to grow your wealth without putting your future at unnecessary risk. And in the next 15 minutes, I'm going to show you exactly how to invest smart, safe, and risk-free, while still building the kind of lifestyle most people only dream about. So stay with me, because missing even one step here could cost you thousands of dollars down the road. By the way, no, hiding cash under your mattress doesn't count as a risk-free investment, unless your mattress is the stock market, which I wouldn't recommend. Can you imagine Wall Street guys sleeping on mattresses full of cash? Yeah, me neither. We'll break this into 5 key strategies. Number 1, high-yield savings accounts, HYSA. Too many people leave their cash sitting in a checking account, earning 0.01% interest, which is basically like financial daylight robbery. Let's do the math. $10,000 in a checking account at 0.01% earns you $1 in a year. You can't even buy a coffee with that. Instead, high-yield savings accounts let you earn 4 to 5% with zero risk. Suddenly, that same $10,000 could earn you $400 to $500 a year without lifting a finger. That's 400 coffees, not one. For example, take Ali Bank or Marcus by Goldman Sachs. Both offer competitive high-yield accounts. Your money grows while staying completely liquid, meaning you can access it anytime. So if life throws you a curveball, car repair, medical bill, or even a surprise trip, you're covered. Think of it like your money finally getting off the couch and going to the gym. It's still safe, but at least it's doing some push-ups. But saving isn't enough to build wealth. What if I told you there are investments that can beat inflation without the roller coaster ride of stocks? Number 2, certificates of deposit, CDs. Banks offer CDs where you lock your money for a fixed time. 6 months, a year, 3 years. And in return, you get guaranteed returns. Picture this, you commit $5,000 to a 1-year CD at 5%. You don't touch it. 1 year later, you've earned $250 guaranteed. No stress, no market panic. Just quiet, steady growth. The risk? Locking money away means no access until maturity. Break early and you pay a penalty. It's like leaving a concert before the headliner comes on. You lose the best part. But here's the twist. Laddering CDs lets you earn higher rates while keeping some flexibility. Imagine splitting $6,000 into 3 CDs, one for 6 months, one for 12 months, and one for 18 months. As each matures, you reinvest at higher rates if available. It's like building a financial staircase, one step at a time. Basically, CDs are like dating someone reliable. Not flashy, not exciting, but they'll never ghost you. And honestly, that stability is underrated. Now, CDs are great for stability, but what if you want the government itself to guarantee your money? Number 3, U.S. Treasury bonds and I-bonds. Treasury securities are literally backed by the U.S. government, one of the safest investments in the world. Unless the government collapses, in which case we'll have bigger problems than your bond returns. I-bonds especially protect you against inflation. When inflation was sky high in 2022, I-bonds paid over 9%. Yes, 9%. Compare that to the 0.01% in checking accounts. Big difference. For example, if you had put $10,000 into I-bonds in 2022, you could have earned $900 in interest in 1 year. And here's the kicker. Guaranteed by the U.S. Treasury. That's like having Uncle Sam himself write you a check. Yes, this is one time where I in I-bonds doesn't stand for iPhone or Instagram. It stands for inflation. Way less fun, but way more profitable. But safety doesn't mean boring. What if you could invest in businesses without worrying about losing it all? Number 4, index funds and diversification. Many young investors try to pick individual stocks, chasing the next Tesla or Amazon. Problem? Most lose money. In fact, over 90% of active traders underperform the market. Think about that. The odds are worse than blackjack. But index funds spread your money across hundreds of companies. It's like owning a piece of the entire US economy. When Apple, Google, Amazon, and hundreds of others succeed, you succeed with them. Instead of stressing over every headline, you get to watch your money grow calmly over decades. That's how real wealth is built. Not overnight, but over time. For example, if you invested $1,000 in the S&P 500 index in 1990 and left it untouched, today it would be worth over $20,000. That's the power of diversification and patience. Think of it like dating. Instead of putting all your hope into one person, you spread your chances. Way less heartbreak and no awkward texts at 2 a.m. Still, even index funds carry some risk. So, what if you want an investment that's literally protected by law? Number 5. Employer 401k match and retirement accounts. If your employer offers a 401k match, it's the closest thing to free money you'll ever see. For every dollar you put in, they might add another. That's an instant 100% return. Here's the scary part. Not contributing is like turning down free money every single paycheck. Imagine walking past a $100 bill lying on the sidewalk every 2 weeks and just ignoring it. And with Roth IRAs, you pay taxes now, but your money grows tax-free forever. Imagine withdrawing $1 million in retirement and paying 0 taxes. That's like winning the lottery, but legally and consistently. Meet Sarah, 24 years old. She started investing $300 a month in her Roth IRA. By 65, with average market returns, she'll have over $1 million, all tax-free. Meanwhile, her friend Mike waited until 35 to start. Even if he invests double, $600 a month, he ends up with less. Why? Time. Compound interest is the closest thing to magic in finance. But remember, even the safest investments can turn risky if you don't follow one golden rule. And that rule is what we'll end with. The golden rule is simple. Never invest money you don't understand. Risk isn't just about the market, it's about ignorance. The more you learn, the less you fear. Today, we covered 5 powerful ways to invest with little to no risk. High-yield savings, CDs, treasury bonds, index funds, and retirement accounts. Each one is a building block for your financial fortress. But here's the truth. Playing it safe is just step 1. If you want to truly build a wealthy lifestyle, want the kind where you can travel, invest confidently, and retire early, you need the financial lessons that schools never bothered to teach you. So before you click away, I want you to check out my next video, Money Lessons School Never Taught You. It's linked right here on screen. That video will connect all the dots and show you how to actually use these safe investments to create lifelong wealth. Don't miss it.